Hi Team Value, JJ here, welcome back. Well, super investor Charlie Munger has sold a big chunk of Alibaba stock, posthumously of course, because sadly he died earlier on this year at the age of 99, just before his 100th birthday. So somebody sold it for him. Let's get into it. Daily Journal Corp, which he managed the money for, is really early in reporting. They're always early. So we can see the trades that they've made in this last quarter. So let's have a look. Now, this is the view on Ticker Terminal, which tracks investing gurus. I've talked about it many times before, and I'll leave a link in the description if you want to take a look. So many different portfolios, and this is Charlie Munger's through the Daily Journal Corp. And we can see here that they sold quite a lot. But Alibaba is the biggest sale here. They've sold 35% of Alibaba. So it's down to 7.62% of the portfolio now. The shares they hold are 195,000 still, and now it's down to just $14.1 million worth of shares, so it's not that huge now. And we can see that they've sold other ones too. They sold 11.23% of Wells Fargo. They've sold 13% of Bank of America stock and 14.64% of US Bank Corp as well. Now here we can see the complete activity of Charlie Munger's buying and selling of Alibaba going back quite a few quarters. We can see that in Q1 2021 was the first time he bought. And then in Q3 2021, he added 82%, so nearly doubling down there. And in Q4 2021, doubling down again, so buying 300,000 shares at that point. But then in Q1 2022, he sold 50%, and the share price had gone down by that point. And it was thought, and he actually said this, I think, that it was for tax loss harvesting purposes. And there it stood for quite some time since Q1 2022. Not much happened. He just held there. And then, of course, he died. And we see after that, they've taken 35% off that shareholding. It remains to be seen whether they're going to sell all of it. As I said, he did say it was a mistake, and we'll look at exactly what he said in public about that. We don't know what he said in private, of course, but we do know what he said in public. He said it in the Daily Journal annual meeting, so we'll take a look at that. Let's see what he said about Alibaba's stock, his holding, and investing in China in general.
Jack Ma was a dominant capitalist in Alibaba. And one day he got up and made a public speech where he basically said the Communist Party is full of malarkey. They don't know their ass from their elbow. They're no damn good, and I'm smart. And of course, the Communist Party didn't particularly like his speech. And pretty soon he just sort of disappeared from view for months on end. And now he's out of BYD. It was pretty stupid. It's like poking a bear in the nose with a sharp stick. It's not smart. And Jack Ma got way out of line by popping off the way he did to the Chinese government.
Well, they're typically blunt, Charlie Munger, talking about Jack Ma. And of course, since then, Jack Ma has weighed in on Alibaba. He wrote a memo, which I covered in a video. I'll put a link to that in the description if you want to take a look at that, where he commented on Alibaba that it needs to really pull up its socks. It can get back in the game. And he congratulated the competition, which at the time was PDD, for doing so well. He said that Alibaba needs to, get back in the game and do well, and it can compete. And so wouldn't it be interesting if Jack Ma came back, if he's allowed to come back? He's been reprimanded by the Chinese government, has been out of it for a long time. But maybe he could come back. We'll see what happens there. But this is what Charlie Munger said at the time about that.
And of course it hurt Alibaba. But I regard Alibaba as one of the worst mistakes I ever made. In thinking about Alibaba, I got charmed with the idea of their position on the Chinese internet. And I didn't stop to realize they're still a goddamn retailer.
If you're getting value out of this Alibaba and Charlie Munger episode so far, I'd really appreciate it if you remember to hit that like button if you're watching on YouTube or anywhere else there is a like button. It helps the algorithm to spread it to more people, and that's what we want. Thanks. Because he's not against retailers. One of his biggest stocks that he was really for is Costco, and that is a retailer, a low-cost retailer. So it's not that he hates retailers, but as he said there, he thought it was a mistake. The question for me is that if he had lived longer, would he have sold Alibaba like they're doing now? Would he have waited? We can see that they're doing buybacks. I'll make another video about that, about the buybacks, increased buybacks that they're doing. Would he have waited a long time? He was known for waiting a long time, just sitting on stocks. So he did say it was a mistake, but did he really mean it to the point where he'd be selling it? It remains to be seen. Did he leave instructions to sell it? We'll never know unless they actually come out and say it in the annual general meeting. Maybe somebody will ask that question and they'll reveal it, which would be interesting, but we'll have to see.
It's going to be a competitive business, the internet. It's not going to be a cakewalk for everybody.
Previously, you stated that despite certain shortcomings, China was generally moving in the right direction. However, with the recent actions taken by the Chinese government, such as capriciously punishing technology and educational companies, declining to import effective COVID vaccines, escalating threats towards Taiwan, do you still maintain that China is a viable investment option for foreign capital, or is China experiencing a similar regression as Russia has seen under Putin's leadership that culminates in the invasion of Taiwan?
Well, that's a very good question, of course, but I would argue that the chances in a big confrontation from China have gone down, not up, because of what happened in the Ukraine. I think that the Chinese leader is a very smart, practical person. And it doesn't, Russia went into the Ukraine because it looked like a cakewalk. I don't think Taiwan looks like such a cakewalk anymore. I think it's off the table in China for a long, long time.
Well, it's interesting what he said about Taiwan there in relation to Ukraine. He thinks that the risk isn't big. And of course, Warren Buffett doesn't think that, because he bought shares for Berkshire Hathaway, and Charlie Munger would have been involved in that decision, or maybe not. Maybe Warren Buffett, takes the lead on that, where they went into Taiwan Semiconductor, which he did say at the annual general meeting with Charlie Munger beside him that it was one of the best companies in the world, just in a bad location. So he bought in billions of dollars worth. It was quite a decent position for Berkshire Hathaway. And then he sold out of it, citing those concerns, preferring Japan, buying those big trading companies in Japan and staying away from China. But Charlie Munger had a different attitude towards that, as we're seeing here.
I think that helps the prospects of investors who invest in China. And the other thing that helps in terms of the China prospects are that you can buy better, stronger companies at a cheaper valuation in China than you can in the United States. So you're getting, the extra risk can be worth running given the extra value you get.
So from his point of view, better value in China, good companies, and much better value than the US. And the US market is much more elevated. If you look at the equivalent US tech stocks, those mega cap companies, well, they're hugely mega cap compared to Baba. And, the metrics are so different that Baba's just been so beaten down. And, in the comments on these videos about Alibaba, I get people saying that, Alibaba's a fraud, talking about the numbers are lies and all this kind of thing, and that never invest in China because of the CCP. So Charlie Munger's got quite a different opinion here, and I'm sure we'll get those comments again on this video. And then there's people like Charlie Munger and Ray Dalio who say it's very investable.
That's why we're in China. It isn't like we prefer being in some foreign country. Of course, I'd rather be in Los Angeles right next to my house. It'd be more convenient. But I can't find that many investments, right next to my house. I have more optimism about the leader of the Chinese party than most people do. He's done a lot right, too. And he led a big anti-corruption drive. He's done a lot of things right. Where is there a place where the government is perfect in the world of sin and sorrow? The democracies aren't that brilliantly run either. So it's natural to have some decisions made by government that don't work well. It's natural to have decisions in each individual life that don't work very well.
Making the point there that nobody's perfect, no government's perfect. Of course, people, especially Americans, are really harsh on the Chinese government and what they do, and they have had these crackdowns on companies. it has to be said that they do have a social purpose behind it. They have this 5-year plan and what they're doing, but unlike democratic countries, they can really implement things really fast and sometimes really harshly. If we look at the lockdowns, and when they went into those educational companies that were mentioned there, they just shut down. They can shut down whole sectors if they want to. They don't see it being in the social good. They can just shut them down, and we're not used to that in democratic capitalist countries of those kinds of things happening. Things tend to move very slowly, but he does, as he said, have more of an optimistic outlook on the Chinese government and the Chinese leader in terms of the way they run it and the companies there. So we'll have to see what happens in the future if the Chinese companies, the tech companies and many other companies pull out of the slump that they're in. Of course, the real estate market has gone down and they've got economic problems, and Charlie Munger didn't live to see the turnaround there. So that's why I wonder whether he would have sold these shares the way that they have, or he would have just held on to it for the long term to see what happens if there was more upside, especially if they buy back. But we'll never know. We'll never know what he thought unless he left instructions and they tell us explicitly what those instructions were, which will be interesting to see. Now, if you've been a subscriber for a while or you're new here, you might like to check out the Art of Value Patreon community. There's a growing amount of exclusive content over there and weekly updates I'm doing now, just more candid comments about the week in investing. So I'll put a link in the description if you want to check that out and maybe see you over there. Now, if you're watching this episode on YouTube, as usual, I'm going to put a link here to the video that the YouTube algorithm thinks that you would like to watch next. So go and see that now if you want to. And thanks to everybody for watching or listening wherever you're doing that. And I'll see you in the next one.